Hey guys, I'm back with a new video. Today I'm going to show you how to pay off debt very fast using a HELOC or a PLOC and velocity banking. Check it out. Okay, you guys, so check this out. This is just a situation that I made up on this piece of paper to show you guys how this would work. So let's say that somebody makes $6,000 a month. Their expenses, so their house payment, their car payments, their groceries, their gas, their spending budget, all of that is $5,000 a month, right? That means that their cash flow is $1,000 a month. That's the money they have left over each month to spend on whatever they want, or they can save it, whatever. But let's say they have a personal loan for $10,000 at 16% interest, which is about the going rate right now on a 5-year term. The minimum payment's $300 a month, and they want to knock this out way faster than 5 years. Well, here's what you can do. In this situation, you could get a line of credit. There's 2 different lines of credit that are recommended. One would be a HELOC, so a home equity line of credit. If you have a house and you have equity in your home, you can borrow up to like 80% of your equity in a HELOC. You can also get a PLOC, which is a personal line of credit. They're basically the same thing. Okay, the going interest rate right now for a HELOC is about 8%. Let's say this is a 10-year term, which I know it's double this, but just hang on. What you're going to do is you're going to get at least a $10,000 line of credit, right? At 8%. This interest rate is better than this one because it's lower, but 2, this is a simple interest. So the interest is based on the amount you owe on a daily basis. So it's a daily interest that they figure up. So the faster you pay this down, the interest gets lower and lower and lower and lower. And since it's a simple interest daily, it's a pretty low amount of change that you're going to be paying for interest. Over here, you're locked in for 5 years. You have to make the $300 a month. And you're like, gosh, I borrowed the $10,000, but you're going to end up owing this company that you borrowed that from thousands of dollars in interest when it's all said and done. So instead of giving another company all the interest and your own money out of your pocket over 5 years, $300 a month, this is how velocity banking can get this paid off way faster. And I promise you this works because I've done it. Okay, you get your HELOC, $10,000. The first thing you're going to do is pay this off. Boom. That goes away. What's that mean? This $300 a month is now added to your cash flow. So this is going to go to $1,300 a month. Because why? You just paid this off. You have no payment. Over here, you still have a payment though. Let's say this is going to be roughly like $150 a month. Not exactly, but it's roughly going to be that. So if you have an emergency, you already knocked that in half in case you needed a little bit of extra cash. But we're not going to talk about that right now. What you're going to do is you now have $1,300 in cash flow each month. When you get paid monthly or biweekly, whatever, you're going to take all of your paychecks and put it into the HELOC as a payment. So in this case, the first month, $6,000. That's going to take your HELOC down to $4,000 right away. But then you're saying, well, I don't have any income left to make my house payment, my car payment, yada, yada, yada. Wrong. A HELOC is a revolving line of credit. That means when you pay it down, you can pull money back out to use, kind of like a credit card, right? You usually have a redraw period of like 3 or 4 years or whatever to do that on this revolving line of credit, and then you have the full 10 years to pay it off. So it takes it down to $4,000, but you need to pay $5,000 in expenses, right? So technically, it's not $5,000 anymore because you paid off the personal loan. So this is actually going to be $4,700 in expenses. So what you're going to do is you're going to pull out $4,700 back out of the line of credit for your bills, right? That's going to make this $8,700. That means you've already taken this down to $8,700 in your first month of having the line of credit. You're going to do it again month 2. So you're going to make your payment $6,000. And that's going to take you to what? $2,700 plus expenses. Right? So that would be, what is that? Help me do the math, y'all. Because I'm stinking dumb sometimes. Okay, that's going to be $7,400. And you just keep repeating this step until you get the line of credit paid off. So if you do the math, right, you're going to have this line of credit paid off in probably roughly 6 to 8 months. 6 to 8 months, you guys. Just velocity banking off of a line of credit. That's it. That is it. And your interest as you go is going to get lower and lower and lower because it's a simple interest. So you're not going to owe this company all that stinking money. It's like magic. It works. I'm doing this personally with my finances. It has helped me pay off so much stinking debt already, and I'm still going.